Episode 3. How to go from $20,000 to $1 million. Why we bet big on volatile ETFs? What if you could turn $20,000 into $1 million, not by luck, but by discipline? Not by timing the market, but by dancing with its rhythm. In this episode, we reveal how the AIM hybrid strategy paired with MACD signals can transform volatile ETFs into wealth-building machines. We'll walk through the strategy, the history, the logic, and show you exactly how we entered each position, how many shares, at what price, and why. Section 1. What is AIM? AIM stands for Automatic Investment Management. It was created in the 1960s by Robert Lichello, a financial journalist, believed everyday investors deserved a system that could beat Wall Street without constant monitoring. His book, How to Make $1 Million in the Stock Market Automatically, laid out a simple idea. Buy more when prices fall, sell some when prices rise. No predictions, no emotions, just math. AIM maintains a cash reserve and rebalances based on price movement. It thrives in volatility. Section 2. Does AIM tell you when to start? Here's something most people miss. AIM does not tell you when to initiate your first position. It assumes you've already chosen a stock or ETF and made your first buy. From there, AIM takes over telling you when to buy more, sell some, or hold. MACD will confirm the signal. Buy signal is confirmed when momentum is up. Sell signal is confirmed when momentum is down. No guessing involved. Section 3. AIM Hybrid plus MACD. MACD stands for Moving Average Convergence Divergence. It's a momentum indicator that shows when a trend is starting or ending. We accumulate more shares during momentum up and reduce our positions when momentum slows down after a huge run-up. Once we're in, AIM takes over managing the position with discipline, adjusting based on price swings and momentum. Together, AIM Hybrid plus MACD form a loop. Enter with momentum. Manage with logic. Exit with profit. Section 4. Why it works on leveraged ETFs. Leveraged ETFs like TQQQ, SOXL, SOLT, and ETH move fast, sometimes 2x or 3x the underlying index. That volatility is exactly what AIM Hybrid needs. These ETFs swing hard. AIM uses those swings to rebalance. MACD confirms when to act. It's not about predicting the future. It's about responding to it with precision. Section 5. Meet the ETFs. TQQQ, short for ProShares Ultra Pro. QQQ is a leveraged exchange-traded fund ETF designed to deliver 3x the daily performance of the NASDAQ 100 index. That means if the NASDAQ 100 goes up 1% in a day, TQQQ aims to go up 3%. But if the index drops 1%, TQQQ could plunge 3%. The underlying index tracks the same companies as QQQ think: Apple, Microsoft, Nvidia, Amazon, Meta, etc. SAW short for Direxion, Daily Semiconductor Bull 3. X shares is a leveraged ETF that aims to deliver 3x the daily performance of the ICE Semiconductor Index, which includes major U.S.-listed semiconductor companies like Nvidia, AMD, Broadcom, and Qualcomm. SOLT is the ticker symbol for the 2x Solana ETF, a leveraged exchange-traded fund offered by Volatility Shares LLC. It's designed to provide 2x the daily performance of Solana Sol, a popular blockchain platform known for its speed and scalability. Its objective is to achieve 200% of Solana's daily price movement through futures contracts. It's not direct ownership of SOL. ETH is the ticker symbol for the ETH Shares Ethereum Trust ETF, a fund designed to give investors exposure to Ethereum ETH, the second largest cryptocurrency without directly owning it. Each of these ETFs is volatile. But with AIM Hybrid with MACD, volatility becomes opportunity. Section 6. Our actual entries. Remember, we started out with $20,000. We planned to buy 5 stocks, each one with $4,000. Here's how we entered each position last Friday, September 12, 2025, based on real trades. SOLT bought 62 shares at $31.76 for a total of $1,969.12. We designated $2,030.88 to buy additional shares when our strategy tells us to accumulate more. SOBS bought 68 shares at $29.15 for a total of $1,982.20. We designated $2,017.80 to buy additional shares when our strategy tells us to buy more. TQQQ bought 20 shares at $96.43 for a total of $1,928.60. We set aside $2,071.40 in cash ready to deploy when our strategy gives signal. ETHA bought 58 shares at $34.42 for a total of $1,996.36. We set aside $2,003.64, ready to accumulate more shares as our strategy signals it. ADBE bought 11 shares at $344.42. We entered this position on September 2nd, 2025. As we had discussed it in Episode 2, for a total of $3,788.62, leaving $211.38 in it. Each position was sized to balance risk and maximize exposure to volatility. We'll add more cash to each position periodically. Here are all positions we are holding. The total account value is $20,177.66, and we have $8,334.57. In cash ready to deploy when our AIM hybrid signals it. Section 7, Simulated Performance. TQQQ3X, NASDA Q100. No, start $100,000 in January 2014. Final value on September 12, 2025, $3,430,995.54. TQQQ's explosive growth paired with disciplined rebalancing turned $100,000 into over $3.40 millions. SOXL 3X Semiconductors start $100,000 in January 2014. Final value $4,309,988.64. On September 12, 2025, SOXL's cyclical swings are brutal, but AIM hybrid turns chaos into compounding with $4.30 millions. SOL 2X Solana ETF start $100,000 on March 21, 2025. Final value is $202,308.18 on September 12, 2025. Compare this to the buy and hold strategy. The final value for that is $214,216.37. ETHA Ethereum Trust ETF. Start $100,000 on August 31, 2024. Final value $193,907.58 on September 12, 2025. The S-modeled growth shows how AIM hybrid could V-captured crypto's rise without chasing tops. Section 8 Trade by Trade Logic. Example SOXL. On December 21, 2021, SOXL was trading at its high of $69.86, and the portfolio was worth $3,463,849.41. Since then, on December 10, 2022, the index has lost 89.67% and was trading at $7.22. Using AIM hybrid, portfolio only lost 72.61%, still with a balance of $948,898.22. From there, the index bounced back up to $31.63, which was still far from its previous top of $69.86. But the portfolio had already recovered and stood at $3,457,677.05. We have another video walking through all the buys and sells using AIM hybrid strategy. We'll make it available so that you can download it and backtest it yourself on other indexes or ETFs. Section 9 Final Takeaway. These ETFs are wild. But AIM hybrid plus MACD isn't trying to tame them, it's trying to ride them. With rules, with rhythm. With results, volatility isn't a threat, it's a gift. If you're ready, this strategy doesn't require perfection. It requires discipline. And for underrepresented investors, it's about reclaiming the narrative. It's about building generational wealth with clarity and control. Next episode, we'll show you how to build your own dashboard so you can track, trade, and thrive. We'll walk through layout logic, visual clarity, and how to make every chart emotionally resonant. Because this isn't just about money. It's about mastery. And this archive we're building, it's a legacy. If you found value in this episode, remember to subscribe. Your support helps us keep creating content that informs, inspires, and reflects what matters most to you. Every click fuels the mission, so thank you for being part of it.